Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we had a busy week. We went through the EIA, we've gone through the econ shows again, and we've been trying to rehash some of the issues that we're seeing, some of the bright spots, some of the problems, and just what the macro backdrop's really going to look like going into 2021. And before we get started, two big things. One, please like, share, subscribe. Your support is appreciated. And then the other is our end of year report is officially done. We're going to be focusing on, obviously, NGLs in terms of companies that are going to survive, thrive, and struggle in this environment. What does it mean in terms of LPG shipments? We've talked about it multiple times in terms of NGL demand abroad versus domestic. And then what does it mean in terms of who's going to be able to capture that? And then China, the China shift is real. We've seen more, which we're going to talk about today again in the Primary Vision Frac Spread show, looking at new refining, new petchem, shifting supply chains. What is this going to do to the market? Then obviously we're going to have our frac supply, which is going to be by spread, by horsepower, by pumper, by basin. So pretty much anything you could ever want to know about where is horsepower within the U.S. And then a look forward and a look back at the U.S. What are we expecting? What have we seen? And then Canada in terms of what was 2020, and give some little forward looks. So now with getting into the meat of the show, we get to talk about the Primary Vision Frac Spread Count, which came in at 159. So we went from 148 up to 159, and some of the things when we're looking at it, because we've been talking about where we should see additions, where things should start to roll off. So if for those that got the report today, we talked about another 3 to 5 additions in the Permian. We got 3, so it's right in the ballpark of where we thought we were going to see some growth. And then we had some pretty stable numbers. The bigger ones that we saw, Appalachia gained another 2. Which isn't surprising if you consider kind of where LNG is, how they're trying to kind of really kind of prepare themselves for year end and into the first quarter of 2021. And then we also had an increase of 2 in the Haynesville and the Eagle Ford, which again, we had a really interesting conversation with one of our clients when we were talking about the Eagle Ford, because it's one of the areas where we have a structurally bullish view on global NGL demand, a little bit tough on pricing in the U.S., but the Eagle Ford is a perfect spot if you consider coming off of the Gulf of Mexico, blending with Eagle Ford crude. It actually creates a very viable product that can be used within the U.S. refiners, abroad. So it's not unsurprising to see some sort of growth, especially going into year end when there's a renewed focus on kind of bridging some of these decline curves. Now, the one important thing is, where are we going to be going forward? And we think that we'll probably get another positive report as we head into to Christmas, but we should see a bigger drop off as we go from Christmas into New Year's, which is something that we'll talk about in a minute. The things that we want to look at are Brent LLS, or Louisiana Light Sweet, which is at about $1.50 or so, and Brent Magellan East Houston, or MEH, at about $1.70. And these types of things have gotten a little bit wider. Now they're tightening up a little bit, and we've seen issues on exports, where some of the exports continue to dwindle down. And there's a mixture of 2 different things. One, as we said on the EIA show, we had the Houston Ship Channel was shut for a day and a half, but there's also a spread problem. There's also an issue with the amount of crude sitting on the market that is comparable to what the U.S. would be exporting, specifically Libya and Nigeria. And we've seen an aggressive move of product going from Nigeria into Europe, and then Libya able to sell out of what was in storage in Malta. The problem is that is starting to build back up, and we'll talk about that in a minute. But it when we're looking at the U.S. as a whole, we continue to see some support. And when we shift to this this chart here, you can see we normally have that kind of drop off into year end. We think that we're going to rally a little bit more into that, and then see a very similar drop off as people then go home for the holidays, and then we'll come back in January fresh and ready with new capital on the sheets for 2021. But they do want to close out the year strong. They want to show that they have a certain amount of stabilization as we go into as everyone prepares for 2021 numbers. But you can see the bounce off the bottom, and in the next few charts we're going to look at WTI pricing in the curve and kind of look at what has been happening ever since the OPEC meeting, because we've had Iraq, which has cut OSPs, or official selling prices, into both actually Asia, US, and Europe, and the Mediterranean, where Kuwait, UAE, Saudi Arabia have cut pricing into the Med, Europe, the US, but have increased premiums into China, which is an interesting strategy as we look at. But at the same time, Iraq is looking to take market share, trying to make sure that they can move additional cargoes, because there will be more supply coming on in January. And by new supply, it's mostly Libya, which has been able to increase their exports to about 1.2 million, up from the 1.05 that we were expecting. But it's a matter of, they signed the deal with a Chinese company that's a prepaid of about $2 billion for about 140,000 barrels a day, 130,000 barrels a day coming out of Iraq. And we've seen there's been a big purchase. And that's why, why are we talking about this when we're looking at the frac spread count? It's because exports have been very supportive of the U.S., specifically in along the Gulf of Mexico. And the question is going to be, can we maintain that? Because we saw what happens when we go from 3 million to 1.5 million, 1.8 million barrels a day leaving the U.S. and the builds that can create. So just to kind of look at what's happened, Angola crude sales have slowed this week. They were very strong essentially through the first week, let's call it 7 days, 5-7 days of December. And they've really started to slow as high prices have started to kind of eat into some of that. With right now, there's about 20, they've sold about 25 of 38 cargoes, which is, slower at this point in time. And then on the Ural side, there's about 7 to 8 cargoes left to sell out of the Baltic ports, which for December, which is fairly slow at this point in time. And we're seeing buying interest from China is starting to thin out, which is what we've talked about when you can see China kind of ramp up and then go away, which is what we saw with the teapots kind of front running their quotas, getting, as we've been talking about, the Lunar New Year. Soon you'll be tired of us hearing that. But this is why we saw a big push from out of Norway into China, out of Nigeria into Europe and China, out of Angola into China, out of Libya into Europe. And again, these are places that the U.S. should be going into, which is why we think that there's going to be that slowdown. Now, when we look at this chart and we look at the last 3 months, it's important to appreciate that we've had a stable grind higher. We've had this stable move. And it started. It looks a little bit like crude pricing, which isn't surprising given the fact that you're trying to capture something. But when we look at Urals pricing into Northwest Europe has weakened over the past 2 weeks. So even though some of the other cargoes have started to move fairly freely, 13 cargoes are planned to load in the first half of December, with 24 in the second half. But the bigger issue right now is just really Urals pricing continues to weaken, which is also showing what Europe is preferring right now. And it's Libya coming back, Nigerian cargoes being fairly cheap and priced to move has been able to move into that, which is going to cap how aggressive we can see some of this frac spread counts move. But because we're starting to get closer to the level of holding the production flat, as we've talked about, that 130, 140 oil spreads. And when we look at the additions, so we had some additions in the Haynesville and the and Appalachia. So there was 4 additions in those 2 areas. We had an increase overall. So once we kind of back that out, we were at about 105. So right now we're getting closer to about 117, 120 in the oil patch, and it's something to consider as we're looking at, well, where are we gonna sit as we're trying to capture this WTI pricing. So you can see that there's been those ebbs and flows, but after that bottom on October 30th, we've had just a straight move higher, which has been supportive of bringing work back. And it's also, timing is perfect, because what are we able to do? We're able to try to hedge, and then at the same time, we're able to try to capture some of that front month and pick up some of this additional cash into year end. Now, when we talk about hedging, it's important to look, and this will be the last point, then we'll let you enjoy the weekend. But when we look at the curve here, you can see the orange line is what's happening currently. So you can see that we've fallen into this backwardation for a piece where you get this backwardation, and now the curve is completely flattened. And it's really because we have OPEC that's talked about, bringing additional crude on, 500,000 barrels, new 500,000 barrels every month from January to April. And you also have some big guys out there hedging, because they're looking to say, okay, well, here we are, and that's where we're getting this flatness, where everything else has been fairly in a contango that has been, let's just say, beneficial for storage, opening up storage, and this is really kind of pulling forward some of these cargoes. And it's a flattening of both sides. You've had the front months come up and the back months come down, which has created that. And we think that we'll get a little bit of a snapback, at least over the coming few weeks, especially with the dollar kind of finding a little bit of a footing here. But the bigger issue is going to be, what is Asia doing? How is buying going? And right now we're starting to see a little bit of a slowdown. And we always get a big kind of surge in the beginning of the month. It's always going to be a matter of, where are we at the middle of the month? Where are we at the end of the month? And how is pricing? What kind of premiums are we seeing? What kind of premiums are going away? And we started to see not only cargo starting to slow on the spot side, but also prices start to soften. So these are things to consider as we look at frac spread counts and what kind of additions can we see as we head into the end of the year. The short answer is, going to see more. I'll make the call right now that we're going to get to 164. I'll say that we're going to finish strong at 164 before we have the holiday lull. But hopefully we can see some additions. And when we think about where is that going to come, obviously it's the Permian. We think that there's another 2 to 3 to come into the Permian. The gas areas were probably tapped out at this point. We don't think there's too much additional work to happen there, but we think that the Permian and the Eagle Ford will see a little bit of a push into the end, where the Bakken, DJ will hold fairly flat as we prepare for an exciting 2021. I'm sure everyone's going to be happy to put 2020 behind us. So again, thanks for watching. Just as a reminder, we have our EIA shows, our econ shows are live. We did an OPEC update, if you want to learn a little bit more about what's happening within OPEC. And then the report came out today looking at Iran. We did a special report on Iran. We'll try to do something special on that next week as well, and a little bit of a geopolitical update. And then obviously our end of year report. So please reach out to find out more. Again, have a great weekend. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.